Hello, and thanks for joining us. Just a quick run through on the live stream as I'm still testing out this YouTube thing. As we carry on, got my microphone and it's Friday, so it's going to be a glass of wine, unfortunately. And I think that we've all entered after the week that was. Fed came out of blackout. We saw what Jay Powell had to say. He did pivot, however, he didn't pivot to being less hawkish. He actually pivoted to being more hawkish. We saw rumors out of China about reopening that were never confirmed, never substantiated. Only just this afternoon, actual fresh reports started to come out saying that they were going to ease COVID flight restrictions now post-COVID in China. Chinese ETFs absolutely rallied. Some of those stocks up 10 or so percent over in Hong Kong. So things like Alibaba, Tencent, that sort of stuff. China looks like it could finally be the buy that I've been waiting for it to be. So that's probably going to be the situation that I put myself into on Monday. I just wanted to wait for confirmation because otherwise it's someone's chance to exit some toxic Chinese positions. And that's how that goes. Fortunately, I have just had some cash freed up because I had an overweight NASDAQ position, which was stopped out for, you only want to be stopped out for a 5% loss, as much better than the rest of it. I think that this is the next leg down, especially after what the Fed has done. We're going to see tech is probably going to take a bit more of a beating as we go through the rest of the month, or at least the next couple of weeks. It probably could be a recovery. Keep in mind, we've got midterm elections next week. That's going to be the big news. Get a red wave come through from the Republican Party. That's going to be market positive. So that could provide a bit of a tail, but it's probably going to be positive more for the bigger end of town. We're going to see the Dow do okay, continue to do okay. It is outperforming at the moment. So there's some trades in that. Switching across, making sure I can't emphasize enough that eventually you want to be adding to the bond portfolio. You might take a bit of a hit, continue to take a bit of a hit on the capital side of it, but those yields are just too good to miss. So go some long duration bonds and add to it there, which is what I am doing as well. Aside from that, pretty much just an admin day. I did record the podcast with David Sokolsky, who's the CIO of Carrera Capital. They do some amazing work, long short fund. Really smart guy. And we talked about China, we talked about Germany, we talked about Europe, we talked about Russia. We also talked about then the derivatives of some of these Chinese things and the derivatives of some of the weather in Europe, what that's going to mean for natural gas, where some of the plays are here. He still sees it as being cash is king. He's trying to play it safe up, which is a pretty good way to be. And he'll be allocating. I mean, their fund is different. Everyone's fund is different. Everyone's methods and goals and strategies and timelines are all different. So the one that he's got, that's what they're thinking is the best way to go. Look, that's pretty much where I'm going to leave that one today. I can tell just looking at my face just how tired I am, and I need to get some sleep. It's been a hell of a week. So look, cheers to you all. Have a good one. Now, keep in mind, like I said, midterms next week. Non-farm payrolls is tonight. If that's a massive beat, market should continue to come off because there's no reason for the Fed to slow down. If it's a massive miss, then the market should rally a little bit. But I think the fact that the Fed, that Jay Powell really came out as hard as he possibly could and said it's not going to matter for now, and they're going to keep on raising. There you go. So it doesn't matter. It doesn't really matter where rates are going to go. So look, thanks very much. Any questions, just let me know and I'll talk to you later. But yeah, have yourself a good one. Bye.